Hi guys, this is a pre-market report of 10th of December. So three important things that I need to discuss. The first one is related to the fresh bank fraud FIR, which is involving Anil Ambani's son. And the second is the US Fed Reserve's two-day meeting and an expected rate cut tonight, which is again very important. So we have already seen RBI rate cut. So if there is a rate cut, that is going to boost the market sentiment, but it's already factored in. I'll discuss about that. Again, India European Union trade deal delays. That's again adding another layer of uncertainty. So along with these, we'll like normal, we'll discuss or break down the global cues, the ADR performance, the institutional activity, the OI data, and the technical zones of Nifty. Okay. So see, the first case is related to Union Bank of India filed a complaint against Reliance Home Finance Limited, RHFL. That's a company linked to Anil Ambani's son. So the allegation is RHFL diverted a loan of 228 crore instead of using it for business expansion. And following this, CBI filed an FIR and searches were conducted at his residence, the CEO residence, and RHFL office also. And the investigation, in fact, further reveals RHFL had 5,500 crore loans from 18 banks. So a sister company had 9,000 crore loan from 31 banks, and a forensic audit by Grant Thornton India LLP that indicated diversion of funds into another group of companies also. So this is still a developing story and the data is incomplete. Only Yes Bank is clearly mentioned among the lenders so far. So what is the market impact right now? Not very large, but if the case expands or more banks get named than private and public sector banks, right? So that may see short-term negativity, and keep this on your radar. So something related to banks. The next one related to the Fed decision. So the US Fed Reserve began, its two-day FOMC meeting last night. So according to the CME Fed Watch tool, there's a 89% probability of a 25 basis point rate cut. This is positive, but you see, analysts expect a hawkish cut, meaning rate cut will be there, but the Fed commentary will be cautious, restrictive, and uncertain. See, commentary is very important. So the market reaction may not be straightforward. Now, how did the US market close last day? It's Dow Jones is 0.3 negative and S&P flat to mildly negative, Nasdaq 0.1% positive. VIX rose 16%, right? VIX rose from 16.5 to 17. So that shows mild nervousness ahead of Fed's meeting. So that happens when the event is there, the Fed, the VIX is normally rising, right? Now, if you look at GIFT Nifty and the other indicators, GIFT Nifty is looking now it's trading near 25,920. If you convert that in terms of the futures, there could be a gap down of 20 to 40 points. And the ADR performance also, if you look at it, it's mixed. Infosys was doing good, 1%. Wipro ADR is also 1%. Reliance GDR is slightly positive. HDFC ICI says negative 0.5%. So the message is very clear that IT sector, that shows showing that strength, but banking ADRs are actually showing the weakness. So in fact, normally it will be like that only in the market. Both will not go together up, both will not go together down. In that case, Nifty will be giving a violent move. Normally, if Nifty IT is doing good, Bank Nifty will be sideways or they'll keep it down. That's how normally. So that's exactly what you see. There is nothing surprise in that. So, you can also understand this is like a kind of sector rotation. Previously, banks were so strong, IT was lagging, but now IT is showing the strength. Bank Nifty is lagging. Now coming to the India European Union EU trade deal, that's another negative trigger. See, Indian Commerce Minister Piyush Goyal have met the European Union Trade Commissioner last day, and there was a joint statement. What is said in that is we'll try to conclude the deal at the earliest opportunity, and that indirectly confirms that the India EU trade deal will not be signed this year, despite earlier timelines. So there is an uncertainty there, right? They are saying earliest opportunity. Whenever it is possible, we'll try to conclude it as early as possible. That means there is no conclusion of reached, right? That's how you will interpret that. Now, why this delay? European Union wants steep tariff cuts in terms of cars and medical devices, wines, etc. And India want duty-free access for certain things like textiles, labor-intensive goods like that. So, and India opposes the sustainability-related taxes that EU want to impose also. So both sides want different outcomes. There is no, coming together on the same platform, and that's the reason why there is a deadlock. And what is the market impact on this? It's not a good sentiment. Already market have enough issues, and that is adding, pressure along with the trade deal uncertainty, which is already there, which is already delayed with the US, right? And that is increasing the pressure on export-oriented sectors also, and that becomes a third major negative cue for today. So these are the important things that I want to discuss. And apart from that, if you look at the institutional activity, FII sold 3,800 crore yesterday. DIIs bought 6,250 crores yesterday. So DIIs are buying, FIIs are selling. DIIs are absorbing the entire FII selling yesterday. It was a steep fall in the morning with a gap down, and then market went up. That is because of DIIs. So you see domestic liquidity, that is there, that continued to act as a stabilizing force, but the consistent FIA selling, that is not allowing the 26,300 level to break. That's the cap at this point of time. Okay, now if you look at the participant wise OI analysis, index futures OI have increased 2.7%. That indicates some fresh position. If you look at the index options, call OI is 48%, which is higher compared to the put OI, which is 32%. So that shows, the PCR have improved from 0.67 to 0.87, which means slight reduction in bearishness, a mild shift towards neutrality. Not much. Yesterday, if you see, it was even more aggressive. Put OI was very less and call OI was slightly more. So the positioning, again, if you look at it, clients, net 20.5%. The retailers are long. So that's a very bullish positioning. And FIAs, they are short 11.9%, bearish bias. Prop traders are short 7.9%. In index futures, clients are 68% long, FIAs are 89% short. This is aggressive. Prop traders are 58% long. So what does this tell us is retail traders are overly bullish. FIA continue to use every bounce to short. So my idea in this present market is to sell on rise only. Of course, DIIs and domestic liquidity is sucking out the pressure and absorbing the pressure, selling pressure. But still, when you get a bounce, that could be used as an opportunity to sell. And this mismatch often result in high volatility also, right? So technicals, if you see, yesterday closed at 25,840. And I think if you get a 40-point gap down, it will open below 25,800, which is again a very important level. Remember, yesterday it tested around 25,720 also. It can go till that level. Yesterday formed a bearish candle, lower high, lower low formation is what we see for the last few days, and closed closed below the 21 EMA also, 20 EMA. And RSI is also turning out to be like a bearish crossover, showing that weakness. So, important support now, since 25,800 is breaking, it could be 25,650 to 25,550 level, that range, and resistance presently at 26,000, right? 26,000 aggressive call rating is there. So from here, if you get a bounce to 26,000, that's the immediate resistance. So 25,800 was the best technical support, since that is broken yesterday. And today, I think it is opening just below that. If that happens, then 25,650, 25,550 range. So see, weakness is there in the market, and support levels, you need to keep a watch on that. The DIIs may buy at the support levels. They won't let it break that level. But at the same time, it is a beautiful sell on rise market. Go with FIIs. So you'll get an opportunity. You'll get the big candles also, right? So these are the things that I want to discuss. And if you look at the option data, maximum call OI is at 26,000 at this point of time, then 26,300, then 26,500, 26,100 also. Put OI 25,800 was there. Now that's shifted to 25,650, 25,600, 25,500, 25,400 level. So there is a confusion. Like now Nifty is likely to trade in between, I think, 25,550 to 26,000 range, unless there is some good positivity which break 26,000 level again. Okay. So see this fraud case related to banks that are uncertainty in the banking sector. Keep a watch on that. More banks may get exposed, and their price may come down. So the Fed cut tonight is very important, but the commentary is going to be more important. Volatility will be there. Commentary, we are expecting that it could be cautious, it could be hawkish. And India EU trade deal, that deal delay is another negative catalyst, and along with the India US trade delay. So FIAs continue selling aggressively, and ADRs are showing strength for IT, but Bank Nifty, it's showing weakness in the Bank Nifty or banks. Nifty remains weak, but supported at key levels. The DIAs are supporting. So today, if you look at it, it's mixed cues, low conviction. I don't want to go like, on the upside. But if I get a bounce, that I'll use as an opportunity to short. So that's it, guys. Thank you so much. I see you in the next video. If you're looking for any mentorship or classes, live market sessions, we have the live market mentorship. I teach practical things only, not the theories, right? So you can get in touch with us every day. We have the live market sessions. See you there.